Those high corn prices have many folks wondering about prices continuing to grow and corn supplies continuing to shrink. We have more in this week's Market Watch. And joining us in the studio is Chad Spearman, market analyst with CattleFax. Thanks again for coming back to the show.
Thanks for having me, Kevin. I appreciate it.
Well, let's talk about this corn market. USDA has been revising these corn projections, these corn yields down. Do you consider or anticipate that will continue to happen as we move through the fall?
Well, Kevin, I think it's closer to a mixed bag. It kind of looks like expectations are somewhat stabilizing. In the September crop production report, the USDA lowered U.S. average yield from 153 to 148 bushels per acre. That yield decline alone cut supplies by over 400 million bushels. I think looking into the fall, starting to hear that some of the early harvest yields are actually a little better than expected, knowing that they're probably going to get a little bit worse with the later, due to the late plantings. The later harvest probably won't be quite as good. But I think right now we're kind of zeroing in on 147 to 151 bushel per acre yield.
And what's it going to mean, these high prices, in terms of the rationing of corn? Do you think the industries, the feeding industry, the ethanol industries and others will in fact begin rationing corn?
I think that we will. We've gone through an unprecedented time frame here with projected stocks to use levels, which is the amount of corn there is relative to total usage. For the last 12 months that have been the lowest on record for 12 consecutive months. So during that time we've had corn prices for the most part between $6.75 and $7.75 per bushel for spot corn futures. I think at those levels we are going to be rationing demand. I would expect that we continue to see historically high corn prices. We've got a recent corn break going on now where we're pushing down towards $6.50 a bushel. I think end users are welcoming that pullback for a chance to own some corn, but I still think we're set for looking at stocks to use levels from 5 to 6.5% between now and to the first quarter next year.
And so tell us, when do you think this corn will loosen up, the overall industry? Will it be not until next year, next harvest time, or what is your projection relative to when this thing will loosen up for us?
I think that's the best chance, is moving into next year's crop, the 2012 crop. Number one, we still have historically high prices that should continue to ration demand. The problem is the only place we can recognize that today or on a weekly basis is on the chicken production side. Egg sets and chick placement levels are well below year-ago levels. They're trying to limit the product and improve their profitability. But on the cattle side, on-feed levels are still well above year-ago levels due to the drought in the southern plains. So we're going to continue to use corn there, but if prices stay high, especially relative to wheat, then I think that we're going to continue to have the incentive for feeders to use anything and everything besides corn in the ration where they can. So I think that'll occur, and then as we move into 2012, the current economics with the new crop futures contracts are very favorable to corn and could support another increase in acreage. Maybe we finally get an actual trend line yield or better, then maybe we have a chance to do that for the next marketing year and improve the stocks to use level.
Well, these are unprecedented times, and we always appreciate your perspective on it, Chad.
Thanks, Kevin.
For more expert analysis, visit CattleFax.com.